Okay, so have you heard about this company that sold for a ton of money? Like everybody was celebrating, and then like just months later, it gets bought back for way less than half the price.
Yeah, it's a wild story. And it's a really interesting company, too. They make women's hygiene and wellness products. It's called Sirona.
Sirona, yeah, I think I've heard of them, but I definitely need to hear more about this whole situation. It's
What it
crazy.
is like a business thriller or something. So many twists and turns. We're going to have to do a real deep dive to understand what happened here.
Okay, I'm ready to dive in. Tell me everything. So
Yeah.
where did Sirona even begin?
Well, it all started back in 2014. Two brothers, Deep and Mohit Bajaj, they founded Sirona, and they were focused on making products that women in India really needed.
Okay, like what kinds of products?
Well, they have things like herbal pain relief patches,
Yeah.
biodegradable sanitary pads, menstrual cup kits.
Oh, and the stand and pee device, right? Peabody?
Right, Peabody, exactly. They were really
Yeah.
trying to solve problems, not just like jumping on a trend.
Yeah, I've heard of Peabody. It's such a smart idea, especially in parts of India where there aren't a lot of clean public restrooms.
Yeah, that's a huge issue, and they were addressing it head on. And that ingenuity is actually what caught the attention of a company called Good Glamm Group.
Good glam. What's that?
So they're this huge company based in Mumbai. They do what's called content to commerce, and they own a ton of different brands like My Glam, The Mom's Co.,
Yeah.
Organic Harvest, Baby Chakra, all kinds of stuff.
So they're like this big beauty and personal care empire.
Yeah, you could say that.
Yeah.
And they were really impressed with Sirona. So back in 2022, they actually invested 100 crore rupees in the company.
100 crore, that's like 10 million US dollars, right?
Yeah, something like that. And that investment was huge for early Sirona investors. Some of them saw like 20 times returns on their initial investment.
Whoa, 20 times. That's incredible. So things were looking pretty good for Sirona right up until the big acquisition.
Yeah, in October 2024, Good Glam decided to go all in and fully acquired Sirona for 450 crore rupees.
So almost 50 million US dollars.
Yep, big money. There was a lot of excitement about the deal. Everyone thought Sirona was going to explode with all the resources and marketing power of Good Glam behind them.
Okay, this is where the story takes a turn for the worse, right?
But
Because I know it didn't exactly work out that way.
right, so instead of going up, Sirona's sales actually went way down. Like they plummeted to just 1/8 of what they were selling at their peak.
1/8. That's
Yeah.
insane. What happened?
Well, Deep Bajaj, one of the founders, he said that the brand was really damaged under Good Glam. They lost a ton of revenue and they ended up with a lot of liabilities.
Okay, so like what could cause a drop like that? I mean, was it just a bad fit or was there something else going on?
It's hard to say for sure, but there are a few things to think about. Like when you combine two companies, especially big ones like this, it's not always smooth sailing, you know?
Yeah, I guess it would be like trying to fit two different puzzle pieces together that don't really match.
Exactly. Sometimes the management styles are different or the company cultures clash,
Yeah.
and that can create a lot of problems.
And it's not just what's happening inside the company, right? There's also all the stuff happening in the market.
Oh, yeah, for sure. Like maybe the market changed or competitors got more aggressive, or maybe people just weren't as interested in Sirona's products anymore. There are tons of factors that could contribute to a decline like that.
So you've got Sirona, this once thriving startup, now struggling under new ownership. And then in a surprising twist, the Bajaj brothers buy the company back for way less than they sold it for.
Yeah, they paid around 150 crore rupees, so less than half of what Good Glam paid for it.
Yeah.
And the interesting thing is they used their own money to do it, even paid off Sirona's debts.
Wow, that's a serious show of faith in the brand. They must really believe they can turn things around.
Yeah, it seems like they're saying, we built this and we know how to fix it. It's a pretty bold move considering how much the company was struggling.
But wait a minute, if Sirona was doing so badly, why did Good Glam sell it back in the first place? I mean, did they just give up?
Well, that's where things get even more interesting, because Good Glam was actually having its own problems.
I did read something about that. They were talking about going public and expanding internationally, but then it seems like everything kind of fell apart.
Yeah, they were definitely aiming high. But then they got hit with a default notice from one of their investors, and the CEO of one of their brands stepped down. And there were rumors about them trying to sell off some of their other companies.
Wow, so it sounds like maybe their growth strategy was a little too ambitious.
It's possible. They went on this huge acquisition spree, buying up all these different brands, and maybe they just couldn't handle it all.
Yeah, maybe they bit off more than they could chew.
It's definitely something to think about, because
Yeah.
managing that many different companies with different products and different teams, it's a huge challenge.
It makes you wonder if all this growth and consolidation is really a good thing for the startup world.
Right. I mean, on the one hand, it can be good for some companies because they get access to more resources and they can grow faster.
Hmm.
But on the other hand,
It could end up hurting innovation if all the small companies get swallowed up by the big ones.
that's the big question, isn't it? Like, what's the right balance?
So we've got Sirona trying to make a comeback and Good Glam dealing with its own set of problems. It's like we're watching two different stories unfold at the same time.
And they're both connected to this bigger story about the Indian startup ecosystem and how it's evolving.
Yeah, it's fascinating stuff. And it makes you wonder what's going to happen next.
Well, that's what we're going to explore in the rest of this deep dive. We're going to look at the trends shaping the Indian startup world, the risks and opportunities of acquisitions, and what the future might hold for companies like Sirona and Good Glamm as they navigate this crazy landscape.
Okay, I'm ready to keep going.
Let's do it.
So we left off with Sirona, back with its original founders, and Good Glam kind of facing some tough times. It makes you wonder what happens next for both of these companies.
Yeah, it's a big turning point for sure. I mean, for Sirona, it's like a chance to start fresh, but it's not going to be easy. They've got to fix the damage that was done, rebuild trust with customers, and find a way to grow in a sustainable way.
It's like they're hitting the reset button, but with all this added pressure because things already went wrong once.
Yeah, exactly. The Bajaj brothers are walking back into a company that's totally different from the one they left. I mean, first they have to stabilize everything, like deal with the debt and rebuild those relationships with vendors and, get employee morale back up.
Okay, so it's damage control mode first,
Yes.
but then they need to figure out what exactly went wrong under Good Glam, right?
Right, that's the key question. Was it like a culture clash? Or maybe Sirona's products just got lost in Good Glamm's giant portfolio? Or maybe Good Glamm's whole strategy of using influencers just didn't work for Sirona's target audience.
That makes me think about influencer marketing in general. I mean, it's everywhere these days, and I feel like a lot of people are getting tired of it. Maybe Sirona's products, which were all about being innovative and practical, maybe they just got lost in all the noise.
That's a really good point. Yeah, maybe Sirona needs to rethink their whole marketing approach. Like maybe they should focus on more targeted campaigns that really highlight what makes their product special.
Yeah, like you said before, they were solving real problems for women, and they need to make sure people remember that.
Exactly. And we can't forget about the market itself. I mean, things change so fast in the consumer goods world. People's preferences change, new competitors pop up, the economy goes up and down. Sirona needs to make sure their products are still relevant to today's customers.
So this buyback, it's not just a chance to rebuild, it's a chance to reimagine the whole brand for the future. But what about Good Glam? Where do they go from here? I mean, selling Sirona for such a big loss has gotta hurt.
Yeah, it definitely doesn't look great. But sometimes cutting your losses is the best move. Remember, they're dealing with their own financial issues with those late payments and that default notice hanging over their heads. Selling Sirona could actually help them free up some cash and focus on stabilizing their core business.
Do you think this means they're going to change their strategy? I mean, they were all about expanding as fast as possible, buying up all these companies. Maybe that backfired.
Yeah, it's possible. They might be realizing that bigger isn't always better. Maybe instead of acquiring more companies, they should focus on the ones they already have, make them stronger and more profitable.
Yeah.
Yeah, it's quality over quantity.
It's like that saying, sometimes you have to prune the branches to strengthen the roots. Maybe that's what Good Glam needs to do now. Focus on their core business before they try to branch out again.
I like that analogy.
Yeah.
And, it's something we see a lot in the business world. Uncontrolled growth can be really dangerous. It's all about finding that balance between ambition and sustainability.
This whole situation really shows how unpredictable things can be in business, especially for startups. What looked like a win-win a year ago is now super complicated with both companies at a crossroads.
Yeah, and that's what makes this deep dive so interesting. We're not just watching events unfold. We're trying to understand what's driving these companies, what choices they're making, and what lessons we can learn from all of this.
Speaking of lessons, I think there's a lot that other startups can learn from Sirona's story, especially startups that are thinking about getting acquired. It's a cautionary tale, but it also shows that even when things go wrong, you can still bounce back.
That's such an important point.
Yeah.
Sirona's journey really highlights how important it is to do your research and find a partner who shares your vision and values during an acquisition. It's not just about the money, it's about finding the right fit.
It's like getting married.
Yeah.
You need to be compatible on multiple levels, not just financially. And if you're not, it can lead to all sorts of problems and eventually a split, just like we saw with Sirona and Good Glam.
And don't forget about being adaptable. The market is constantly changing, and businesses need to be able to adjust their strategies, their products, even their messaging to stay relevant. Sirona's experience shows how important it is to analyze the market, keep innovating, and be willing to change direction when you need to.
Okay, so if you could give one piece of advice to startups that are considering acquisition offers, what would it be, based on everything we've learned from Sirona's roller coaster ride?
Don't jump into an acquisition just because the money looks good. Take your time, do your research, and most importantly, trust your gut. If something feels off, it probably is. It's your company, your legacy. You need to make the best decision for the long haul.
That's great advice. It's easy to get caught up in the excitement of a deal, but you have to stay focused on what's really important, building a sustainable business for the long term.
Exactly. And remember, even if an acquisition doesn't work out, it's not the end of the world. Like we saw with Sirona, there's always a chance to regroup, come up with a new plan, and come back stronger than ever.
It's a reminder that in business, resilience and adaptability are just as important as ambition and innovation.
Absolutely. And that brings us to the bigger picture of the Indian startup ecosystem.
Yeah.
We've seen so many acquisitions lately, which is a sign that the market is maturing, but it also raises some big questions.
Like, is all this consolidation a good thing in the long run? What does it mean for innovation and competition?
Those are the questions we're going to tackle in the final part of this deep dive. We'll look at the trends that are shaping the Indian startup world, the risks and opportunities of acquisitions, and what the future might hold for companies like Sirona and Good Glamm as they navigate this ever-changing landscape.
Okay, sounds like we have a lot more to cover. Let's get to it. Okay, so we've been talking about Sirona and Good Glamm and all the ups and downs they've been through, but now I want to zoom out a little and look at the bigger picture. The whole Indian startup scene.
Yeah, that's important. I mean, Sirona's story isn't unique. It's actually part of a bigger trend in India. There have been so many acquisitions lately. It's crazy.
Yeah, it seems like everyone wants a piece of the action. But what does that mean for Indian startups in the long run? Is this like a good thing or a bad thing?
Well, it's complicated. On the one hand, consolidation can be good for the market. It can lead to more efficiency resource sharing and, access to bigger markets.
Right. So smaller startups can benefit from being part of a larger company.
Exactly. They can leverage the expertise and infrastructure of the bigger company to scale up faster.
So it's like a shortcut to growth.
Yeah, you could say that.
Yep.
But there's also a downside to all this consolidation. If a few big companies end up controlling most of the market, it can stifle innovation and limit consumer choice.
Right, because then there's less incentive for new startups to come up with new ideas and new products.
Exactly. It's a trade-off. Your efficiency and scale versus diversity and innovation.
So what's the ideal scenario then? What does a healthy startup ecosystem look like?
Well, a healthy ecosystem needs a balance of both. You need those big established players who can drive growth, and you also need those scrappy, innovative startups who are willing to challenge the status quo.
Kind of like Sirona back in the day with their unique products.
Yeah, exactly. They were solving problems that nobody else was even paying attention to.
Yeah.
And to keep that kind of innovation going, we need policies that encourage competition, support early-stage startups, and protect intellectual property.
So it's not just about celebrating the big acquisitions, it's about making sure there's room for everyone to succeed.
Exactly. And it's also important to remember that acquisitions aren't always the best solution. Sometimes organic growth or strategic partnerships might be a better path for certain startups.
It's all about finding the right fit for your company and your goals.
Now let's talk about Good Glamm for a second. Their challenges really highlight the risks of growing too fast through acquisitions. They call it integration debt, and it can be a real problem.
Like trying to eat too much food too quickly, you'll end up with a stomach ache.
Yeah, that's a good way to put it. Good Glamm might need to slow down a bit and focus on strengthening the brands they already have instead of constantly acquiring new ones.
Like taking care of a garden, you can't just keep planting new seeds, you have to nurture the plants that are already growing.
Exactly. And that brings us back to Sirona. Their buyback might actually be the best thing for them in the long run.
It gives them a chance to go back to their roots, focus on what they do best, and innovate without the constraints of being part of a huge conglomerate.
Yeah, they have a real opportunity to rebuild their brand, reconnect with their customers, and come up with even better products.
It's a reminder that sometimes less is more. You don't need to be part of a giant company to be successful.
And ultimately, both Sirona and Good Glamm stories offer valuable lessons for the whole startup world.
So what are the key takeaways here? What should our listeners remember?
Well, first of all, never underestimate the importance of cultural fit when you're considering an acquisition. It's not just about the numbers. It's about finding a partner who shares your values and your vision.
Right. It's like any relationship. Compatibility is key.
And second, remember that growth isn't always easy or predictable. There will be bumps along the road, challenges, setbacks, even failures. but it's how you learn from those experiences and adapt that determines your ultimate success.
So be resilient. Don't give up easily.
And finally, never lose sight of your core values and your purpose.
So that was today's episode of my Side Hustle Weekend podcast. For everyone listening, if you're ready to take action on what you learned today, here's where you can find more resources. First, head over to sidehustleweekend.com. I've put together detailed guides, templates, and case studies. And while you are there, don't miss out on my free newsletter, Side Hustle Weekend. If you found value in today's discussion, hit that like button and subscribe to join our Weekend Hustlers community. Turn on notifications so you don't miss our episodes where we break down more side hustle strategies. Check the description below for all the tools and resources we mentioned today. Remember, everyone's journey starts with a single step. Whether you're looking to make an extra $500 a month or build something bigger, start with what you learned today and take action. So, thanks for tuning in, and I'll see you in the next episode where we'll break down another practical way to grow your income.